Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's Tuesday, and let's see what they got going today. Yesterday we had a good stock market rally. It was up 600 points, which is a little above the average of action as far as I'm concerned. The media gets excited about it, thinks it's the next coming of the bull market or something like that. But in the end result, it's just a nice, big, solid day yesterday, and it seemed to hit across the board. The tech stocks weren't as strong; they were kind of weak out of it compared to the rest. But overall, it wasn't that bad. There was some real strength there. So we saw that. We saw the dollar again moving down, just as you can see on J4X this morning. You see it there with all the red hinky ASCII bars. These bars right there. The pressure is on. You see it over here on Chicago Quant. Same situation. Lots of red dots. It moving down. You see a little bounce trying to develop out of this sell-off that's occurred, but we're still in a weekly buy. We're watching this. We see it broke the time manifold on the plus side of the market, and we see the echo already breaking down. Only if we saw the green line closed also would we think that there could be some real pressure on the dollar going into next week. We'll see. As we always do, we watch how it trades, how it plays out mathematically, and in the end result, it's usually right. So that's all we can say and do, and that's the answer to the question, I guess, as we would say. All right, from there we have seen gold holding firm, silver holding firm, copper holding firm. The platinum went into the weekly buy last week, and we figured, as we mentioned last week, that we would see the strength in the metals complex because of that. As it seems like the platinum, in some level, leads the market, but at the same time, it is 50% cheaper than gold at this point. And historically, that's very unique, and just hard to believe that it actually exists that way, but it does. And so we don't take it. Hey, Robin, how you doing? Yeah, we don't take it that serious. We just think about it as just part of the process, just part of the QE process, the quantitative easing process by the central banks across the planet. It seems to be the recipe of their nature and how it all functions in the end. And we've been, talking about it here for a long while now. QE's been going on since 2008, and we've been discussing it here since 2000, whenever we started doing webinars for Dukascopy, and it's not a surprise. It's just the way the central banks function now. They are the buyers of last resort. They set the price. All right. From there, we'll drift over to we'll go over to the euro and see what the euro is up to this morning. That's also in a daily buy, and it's been climbing, and you can see it there. And it's trying to get through its weekly signal too. Now that's been in a weekly sell even longer than the Swiss. 2, 4, 6, 8, 10, 12, 14, 15, going on 16 weeks. We'll see if it finally flips back out of it. So you can see we've been watching this thing glide down for a while now in that weekly sell. Let's put it up on J4X. And right there we go. Here's the daily chart. You can see the strength kicking out here. And you can see how the line has turned up. And it's trying to, glide up, just like it's doing here on the daily to this daily. Let's take a look at it on a weekly basis. The weekly is in the same boat as our work. It's been in a weekly sell. You got 5, so you got 6 red hinkies in a row there, and then you got 7 there. So you got 13 out of 15 red. So there's lots of pressure. The lines did fairly well. Can't complain. They did bounce in and out a few times, but overall, the end result is that you could see that there was lots of pressure on the weekly signal. Get back to the daily there. Hey, Jordan. Let's see, Robin. what else we got to say about anything here when it comes to the euro? I guess a lot of people keep on thinking par, par, par. I know 54 was saying that. I think Jordan was saying it. We all watch and see if one day it finds its way back to 100, back to par. And that is the gist of it all. I guess you could say that is the way it kind of, people, they like to look at round numbers. Matter of fact, I just saw somebody in was it fractional? No, it was some other type of mathematics, but they were saying the same exact thing. High form of mathematics, how the round numbers seem to be things people gravitate towards, even mathematicians. And when you can see tens, hundreds, thousands, 10,000s round out, it kind of makes it a little bit more comfortable, I guess you could say. Janice, hey, how are you? Hope you're having a good day too. So that is part of the recipe is those round numbers. So what was kind of interesting is that Swiss actually ran up to 100 or 1.00 or 100. I guess it's 100. Let's take a look at that. Let's go back to it real quick. The Swiss did that a couple of weeks last week, right? It went up to par. Got a little past it. Let's just do it on J4X so you can see it even a little bit, or Chicago Quant so you can see it a little bit clearer. Right there. Yeah, there's the 1.000. Ran up to it for 4 days. It played with it, bounced around in there, and finally rolled over. And here we are at 9.6. So yeah, that's it's an interesting characteristic where we look for the round numbers. So over on the euro, now we saw it get down to 103 and change, and a lot we're looking for that 100. And as time goes on, I'm sure, well, you would think somehow or another it'll find a way to get there. That is the process of it all in many different ways. Yanis Dagerts. All right. What else can we say? I guess that's about it when it comes to the euro. If anybody does want to get deeper into any of these particular currency pairs we've already looked at, you can just tell us to go back to them. We're not afraid to bounce back and forth. That's one of the benefits of being experienced and accurate combined together. You see here, cable doing the same thing. We see strength in it. It's high up in the end of its range. And at the same time, we look at it over here. You see the same thing going on. It's in a daily buy from here, and it's pushing up. So we recycle this. If we do that, I'll make it more identifiable. There we go. That looks better, so you can see it better. So you can see there, it's way up above the time manifold, bouncing around. A lot of pressure, but it still finds ways to climb. Now today they are selling it down. And you can see the weekly, where's it at? Right here. There it is. It's still not climbing through enough, but we watch and we see and we wait. Just wait for that math to make that turn. Everything is getting to the edge. But we are really, we're really, I guess you could say we're really close to that quiet time of the year, the summer months, and we'll see if we get the summer action where it tries to die down a little bit more. It's hard, for years the summer months were a real quiet place, and then once quantitative easing got going, forget about it. It became a very volatile place, and it's been that way since 2008. Summer months are definitely dynamic and aggressive. So it really, we hope that we can get a summer off once in a while. But of late, you have to be on guard. You have to be paying attention when you have longer term positions. Now, from there, we'll jump over to the Turkish lira. There it is. See, back to the top end of the range again in the dollar against the Turkish lira. There it is there on J4X. You see it here, the strength of the daily. It's doing the same thing here. They did go and flirt with a sell area, but in the particular dollar Turkish lira, it was a volatility, so it's still in the buy from all the way back to here. I guess it's reflecting right there. Is that? Yeah, I think that was it. We got a sell there, and then it went right back into the buy. Let's put that in. Where's it at? Right there we are. You see that strength there. So it's been in the buy since here. Been a long weekly buy since back in here. And then we do have the best one of all, and that is the Turkish lira, the Euro Turkish lira. We find that to be a much better product to trade. We think it's just location, and it's broken out of its range for the first time. Look at that. Since the big, we're giving you puts. So something, we've been concerned about this. Something's going on. I don't know if maybe they stopped giving those puts away. We haven't seen any news on that. We've seen some aggressiveness between Finland, Switzerland, and not Switzerland, Finland, Sweden, and Turkey, but we've not seen any real clarity of anything talked about financially. About 6 months ago now, I guess it is, in late December, they declared that they were going to give free puts to purchasers of their currency. And that made this whole big, giant action occur. It was running mad, and the place was looking horrible. And they declared it here that day, and it calmed it down. And it went into a very nice sideways action for a long while. But all of a sudden, something's starting to brew. Here we are and coming into the end of May. So what is that? That's 5 months with this new policy, and maybe they're not paying, or I don't know. Something will come out. I'm sure we'll see the story pop out. Something is kicking out in the wrong direction as far as I'm concerned. I thought it was a brilliant idea to do what they did. But somewhere back in here, I guess, about 3 or 4 weeks ago, something started where it was doing good stuff. It was keeping very tight. It was acting, much more stable. And then, as you can see, ever since they declared those puts situation, and then all of a sudden something's kicked up, and you can see our weekly turned up. The math started picking it up, and the daily joined in, and they've not let go when it comes to the Euro Turkish lira. It's been in a buy since here, and this just missed it right there. And you can see that something's going wrong. It's run from 1550 now to almost 1750. So we're looking through the news. We're trying to keep an eye out. I get a feeling something has changed, and they just haven't announced it yet. And then there'll be, when the inflation numbers came out, what was it, about a week and a half, 2 weeks ago. I guess maybe some money was disappointed that the inflation numbers hadn't come back in yet. I don't know, but we'll see. There's definitely a fundamental having an effect here. We just don't know what it is yet. But the math is picking it up, and that's the most important thing of all is, having the math pick these situations up and not, put anybody in real harm's way when they're trading these different products. The idea is the math picks it up, and you have to honor the math over the fundamental, the quantitative math, the technical analysis math of our quantitative strategy versus fundamentals like unemployment, inflation, CPI, PPI, interest rates. They're the old fundamentals that just don't have much. What's the word? I just want to. It's just like a grip. They don't have a grip on price discovery anymore. Whereas before, they were the bulwark. They were the primary way of following pairs trades and stocks and so forth. These stocks still do it. Earnings have been high in the stocks, so the stocks keep on going higher. And when you have interest rates at 0 and 1% or half a percentage point, corporations are able to borrow enormously lots of money and make more money at incredibly low rates. Even with inflation at 8% plus, they're able to borrow at much lower rates, which is just phenomenal. Free money is free money. All right, so from there, we drift over to the Canadian. Let's see what's going on with the Canadian this morning. Right there. And you can see the weekly is trying to roll over here. You can see the daily's been in a sell since here. Hasn't gone too far. Oil is very firm, so normally we find this particular pattern staying that way. In other words, it's finding ways to go down. You can see that it's kind of grudgingly doing it. It's not exactly like, hooray, oil's going up and we're making lots of money. That's Canada is an oil country, and because of the percentage of people versus the amount of oil production they have, and they're also a commodity in the sense of gold and silver. They're really big on that too. So those things, not counting that they're an industrial nation, they're part of the OECD, they're part of the Commonwealth, they're neighbors to the United States. Lots of positive things there. So that normally when interest rates are low like this, and then you see oil and gas go up in price, it usually adds value to their currency. Ftse 100 going up. Let's take a look at it, Daniel. How are you doing today? There is the Ftse. Let's see, where are you, Ftse? It was minus when I saw it earlier today. So that's pretty cool that it's lifting. There's the Ftse right there. Yeah, it's trying to turn up. Nice. It's a plus. And I guess that's in the... Yeah, it must be in pounds. And, we're seeing the strength here. I guess most of the... Let me go over and take a look at our currency stocks. Yeah, there you go. S&P 500 is down 38. Dow Jones Industrial Average is down 171, and the Tech 100, the Nasdaq is down 194. Almost giving up everything it made yesterday, which is kind of interesting. But the pressure seems to be. Let's see what's going on. Let me look at some of the others too. Where's that? Right there. Yeah. So I've got. Let's see, did I pass it? One more maybe. There it is. It's around here somewhere. I just was looking for it. There's Nasdaq, Energies. Let's see. Just trying to find the DAX and so forth. We can get... Oh, there's a Ftse. Now, Ftse shows, yeah, it's basically almost unchanged. So that's interesting. DAX is down 106. Was down 90-something when I first started right before starting the webinar. And the Kakaran is down 54. The AEX is down $8. It's a $686 index. And that STOK, or STOXX, is down 22 points. Shanghai was down, and Australia was down, and standard, is it the Nikkei was down 253. The Hang Seng 358. There's some pressure across the stock markets going in, with that strength of yesterday with the U.S. market, which was, you can see. Let's go just take a look at that since you mentioned it. There's the Nasdaq. So the Nasdaq, climbed up yesterday, and now it's almost back to where it started from today. And it didn't get into the buy; it just missed it. Whereas the S&P 500 did get into a buy, and it's still holding up higher than there. That was Friday's close, and you can see it's still higher up. Now, what was interesting is the Dow Jones Industrial Average is holding up very well too compared to yesterday, and they're just doing a little digestion. We had the red and green yesterday, and we're having a red and green now, and we're still holding over. None of them, you can see all three weeklies were weak. So, just not any real strength there. Let's see. Ftse only down 2 to 3% from all-time highs. Yeah, it hasn't really. Yeah, where the rest are down like 20%. That's a very good point. You can see it here. It's definitely way up compared to, let's say, the S&P 500. Look at that. It's buried. Yeah, and it's kind of interesting. The U.S. markets have been, sold down over the last 4 or 5 months. Mr. Biden makes it very tough. He does. He does not. They call it the animal instinct. He's really removed capitalism from a lot of things going on. Ftse only 2 or 3. Yeah, and down. Yeah, exactly. So I don't know if any other countries are doing any better or not about it, but the one thing is for sure is the Ftse, which I was really surprised overall why the cable got hit down so hard. I was really disappointed. I thought there was much more strength hidden there. But you've pointed something out that's kind of interesting, is that the Ftse has held up much better, and I didn't even notice it. I just don't follow it that much, and I should. That's because I've been convinced that the cable should be much firmer. And so they're buying the equities, but they're not buying the currency itself. And again, that's the central banks and the QE, something we've had to deal with for a long while. But that's something really interesting, Daniel, that you point out that makes a lot of sense. Because I'm a big fan of the Commonwealth and England when it comes to economic basis. And so I've been kind of confused why the currency's been taking it on the chin. But now you pointing out the fact that the equities have been holding on says a lot. It does. Because I keep on looking for that strength, and it's been there. I just haven't noticed it. Didn't see it in the actual in the stock indices itself. Whereas I think the DAX, let's see where the DAX is. I imagine the DAX is like the U.S. markets. Yeah, see, it's the same way as the U.S. markets, way down, from their all-time highs. And it just shows you that the pressure that's on most of the world right now, maybe more foreign equity or maybe more equities parked in these places. I don't know. I don't have a strong opinion. Now, the cable took it just as hard as everybody else over these last 6 weeks. But it didn't have an effect on the stock market there, which kind of makes sense to me. Yeah, now Nasdaq, that should be, because they're the most interest sensitive of the stocks. Maybe that's the answer too. Maybe the Ftse, those stocks in the Ftse, may be so established and old school that they don't have much of an effect. I think our Dow Jones Industrial Average is like that too. It's like down 15 or 12% for the year. It's not. The Dow Jones Industrial Average is not down that much. Stock indice down 7%. Yeah, that would make sense. I would imagine any stock indice that has these modern companies like the Googles and the Amazons and the Meta and so forth probably feel a lot more pressure. Because they're very interest sensitive. They depend on interest rates to be low to gain more value. Their costs are high because of that. In other words, the cost of doing things. They have to borrow. They're very cash intense, they call it. And so they have to borrow short-term money. And that hurts their balance sheet, cuts down on their earnings. Whereas like the Dow Jones Industrial 30, I think it's only down like 12% for the year. and it's almost nothing in there is really that much captured. Maybe Honeywell. Is Apple in there? I think Apple's in there. Maybe Apple. Let's see. Intel's in there. That could be pressuring it and knocking it down. Because that's very cash heavy. Microsoft to a certain extent. Cisco Systems. They have an interesting bevy of tech companies in there. Australia down 7% also. Yeah, I imagine. I bet if you took a look at it's just a wild guess by me, but it reminds me of the Dow, how it's nowhere near as much down as the other two indices here in the States. The S&P 500, which is down about 18%, and the the Tech 100 down close to 30. Oh, excuse me. A little yawn there out of nowhere. I would say that that would be a lot to do with the interest rates. I really do. I think that might be part of the answer when you really think about it. And, in other words, I guess the best example is you look at the Tech 100. Those companies have good earnings. They're making money. Problem is that their balance sheet is pressured by borrowing because they have to always borrow. And since they're always in the market borrowing money, that kind of takes down their earnings. It's not equal to other companies that are in there, But, and then look at like an Apple. Apple was finally, after all this time, broke that 59 area, and they really broke it down hard. You're looking at a product now that's, trading, what is it, in the 40s, I guess it is? Where is it at? Let's see if we can put that up there. Right. Let's see. I guess we can go in right here. I mean, here's Apple. Yeah, it's trading. Went down to, was that 132.61 3 days ago. They've made a bottom in here, jumped into a buy yesterday. Still holding up, but down a little bit in the pre-market. Been in a weekly sell since back in here in the 160 area. So you see that right there. Now something like an Amazon, which is down, down about 30 some odd percent also. In a weekly sell from the 3,000s, traded down to the 2,000s. The low was at 2,048. So down over 30%. It goes in and out of the daily sells. Goes into sell here, jumps in. Nope, still in a sell. Goes into the buy here for a couple of days, and then back into the sell again. So these are very interest sensitive. Gold and silver looking good. I wish the weekly would, basically step up. I would love to see that weekly get going. Here is silver, and that's a good segue in. When we look at Canadian, usually you expect to see strength in the metals if you're seeing the Canadian gain against the dollar, and so you can see here silver is trying to get back into the sell here today, which is kind of surprising. But there's some pressure on it. But we are back, we were up. Let's just double check something here. I just want to see yesterday's silver. Right there. Hold on a second. I just want to see yesterday's silver on another chart. Because I'm a little confused about yesterday's chart there now. No, that's about right. So, yeah, so that's all accurate at this point. And I would say that I'm a little surprised that it's trying to break down. We're in the weekly sell, and it just refuses. It's been in that weekly sell since the 26s. So I'm really disappointed that we had to get all the way down to almost, was it 20 and a half, basically? So it dropped $5.50 through this whole weekly signal. Really would love to see this thing lift. Just get the weekly up into the the zero line there, you know. Okay, let's see. Oh, look at that. Daniel said crude oil, natural gas, wheat, corn, soybeans pretty high, and they might want to run up. Yeah, you know they're. Someone's sending me a message. Let's see what it is. The what is it? The let's see what you just mentioned some stuff that's kind of interesting in there. Crude oil. Let's put crude oil up. There's crude. It's kind of trapped in this real dead zone. You know, it's not really pushing super duper. You know, would love to see it show more life, but I guess in many ways it's a lot better that it's not. You know, it's probably a lot better that it's not. And that's probably a good thing if we just get the you know the oil market to kind of just neutralize itself. That would be really nice in its own right. You know, I mean that's half the inflation that we're seeing, not counting the crazy policies of the U.S. government. I mean that's the other factor right there. And that is something to think about, you know. And that is that the issue is, you know, the supply chain drives prices up. Bad policies make things, go up in cost, that type of thing. There we are. And that's where we stand at the moment. Let's see. Oh, let's check out one of the other ones too. Natural gas. There's the nat gas. That's just been, you know, with the Russian situation, it just makes it harder and harder. And so that's really what it comes down to. Wheat and corn, soybeans, they've been all nice and firm for a long while. I think, was it some of them are in, let's see, 2 out of 3 are in weekly sells. Let's see, where's that? There. Let me just answer this. There we are. There we go. So, when looking at all those things, they just, you know, again, costs. You know, we're seeing wheat. Where is it at? Like red wheat is like 13 and a half a bushel. You know, we're looking at white wheat for breads, you know, trading at like 12 and a quarter, 12 and a half. You know, corn in the 7s, beans November beans are in the 15s, but July bean, old crop, is 17 and change, over $2 difference. All right, now let's drift over to, we've seen the crude oil moving up here. Let me just put it up there one more time. And then what we're going to do is we've seen gold acting firm, so we just automatically assume, let's go to this, and we'll see the South African Rand right there. But if anybody wants to see something, just shout it out and we'll go after it again. There it is, South African Rand. You see it's at its lows of, say, the last few weeks, right there, and that obviously is part of the situation of where silver has been going up in value, And gold has been going up in value, and that's about norm for the South African rand to gain against the dollar. Now, no doubt, the dollar is being pushed back down after just one mad rampage that just didn't let go. I mean, just, it was just an enormously strong move in the dollar against all the pairs across the planet. And again, just like I said, it surprised me, especially against the cable. I didn't expect that against the cable. I thought the cable was going to lock itself at a much higher range, but it knocked everything out of its ranges, except for the two currencies, as I was mentioning yesterday, on the North American continent. They seemed to stay with their ranges, which was kind of curious. The fact that they did. It must have been a combination of safety, being next to the United States, less cost, moving products, that type of thing. I mean, you have U.S. buyer like inches away from you compared to having to go across an Atlantic or a Pacific or something like that. It makes probably a lot more economic sense being neighboring countries to the United States. It had less of an effect of the inflation. The inflation of energy costs and so forth. And so, what else do we got going on here? From there, we go over to would we still the currency that will not be named. Everybody's saying, "Geez, these sanctions are not working whatsoever," and the product is down, trading in the 55, 56 area now. And we've been pretty much in a weekly sell now since they linked their currency to gold and minerals and oil. It's been 1 week in a buy, 2 weeks in a buy, and now it's put itself right back under. So it went into a weekly sell, and here kind of adjusted for a little bit down in here. The dailies refused to let go. Look at that. That was really weird. It just very firm, but it lost value still. This currency is holding really, really well. We keep on expecting a 49 currency. Boy, I'm surprised it could go from 140 to down to 50 or 45. That's like, wow, that's very impressive. All right, from there we go over to the Japanese yen. You see the yen is just slowly weakening since that last explosion with all the rest of the currency pairs. The dollar really ripped into it. And you can see here we're now in a sell from here, and we're now finally flirting really well with that weekly sell. So it's like the yen may find itself down into the 125s, which, Robin, maybe it's time to write an article on that going into Thursday. We'll see, but it has that look to it, that's for sure. All right, from there we slide over to the Mexican peso. Right there. You can see we're playing with the range. We're at the bottom of it, just the same way the Canadian was at the top of its range. And again, it could literally be just the cost. It's with this, a combination of risk, of war, and costs of inflation, and that's why Mexican peso and the Canadian dollar have held up really well compared to the rest of the currency pairs. All right, from there, what do we got? And if anybody wants to see a particular product, just shout it out. I did, go through some of those with Daniel. He threw out about 5 or 6 different products out there. If he cares to see the rest of them, just let me know. We will go back to it. And then let me think, where else we go? All right, so this is pretty much it on the currencies, and I feel really comfortable with the idea of relating to the fact of location, just like we watched the euro against the Turkish lira show a better trading pattern than the dollar Turkish lira pairs trade. I was looking at dollar yen 5-minute chart, looking at what looks to be a sideways movement. Let's take a look. And dollar Mexican peso in a sell. Well, yeah, you can see that here. It's in a 5-minute chart or in daily on the Mexican peso dollar pairs trade or dollar Mexican peso. You see it's playing with the bottom end of the range, so more than likely it's going to try to turn up. Now, would like to see the weekly show some life in it and the daily get going before we're confirmed to that, of course. But that is what's going on there. Let's check it out on a 5-minute. All right, here we go. And there's the 5-minute. Well, went into the buy there. Went from, was that 127.20-ish area to the 50-ish area. Then it got really choppy in here. Went into a sell, then back into a buy. Back into a sell here. Broke down to the high 20s. Then jumped back into a buy here. Popped up about 10, 12 pips, something like that. Now it's broken down into a sell there from the 32 area. Is that what it is? 31 area. And has gotten down to the was that 15 area, so it's dropped about 15 pips and still seems to be holding on to that weakness, Daniel, what do you mean by dollar Mexican peso sell? You think it's going to break the range and gain more strength? Is that what it is? Or are you looking at that in a 5-minute trading basis also? You see here, what are we doing? They just went after 10, was it? I think it just went after 10. Let's see what the low is. 11 maybe? 10.6. It looks like it's... What were you saying about the 5-minute? You were saying the chart looks sideways. Yeah, it does. Look at that. It bounced off this spot there. Let's tighten it up a little bit. Yeah, you can see that. It's the shot. You can see for like the last 6 hours, it's doing this. Made a low here, like a reverse head and shoulders. Did not lift it. Didn't break the neckline, and rolled over again. Now it's trying to challenge these lows again as we speak. Let's see. Daniel says from 19.8 to 19.4. Let's go look at it again. Daniel-san. Yeah, it's bouncing around in there, that's for sure. You see it's playing with the bottom end of the range. So you think it's the low today is 19.79, and the low there yesterday was 19.77. So you're thinking that they're going to break the 7.7 and get down to 4. I guess the bottom end of the range, where would that be? That would be 4 would be like off the screen just about. That'd be interesting. I don't think we've seen anything like that, have we? There was a low of 72. That was a low of 73. I guess it has to break the 70s area. To do it there, it went to 77 yesterday. And it went to 79 today. So I guess 77 could be, a strong area there. The 80 seems to be, the area that I pay attention to on a day-to-day basis. But it has played with the 70s. So you're thinking it's going to go down to 19.4. Yeah, we'll see. It's in a daily sell and a weekly sell. So it does have the opportunity. Let's see what it looks like on J4X. Right there. You can see there, it's trying. There's no doubt about that. There's a lot of weakness. It seems like it hasn't seen 6.5 though. We've been trapped in the sevens as lows for the last few months. So I guess if it breaks the 65, you're thinking that it can get down to 4. A new low. Hit the 65, go to like 82 or 87, and then roll over again, go through 70, the 73 or something like that, the old one, and blow out the 65 and go to 40. I could see something like that. That wouldn't be too surprising. Just the way things have been with the surrounding nations, Mexico and Canada showing lots of strength against the dollar. That's been pretty impressive, actually. All right. Let me think. What else can we take a look at here? Do you want to take a look at it on a short-term basis? I can try to throw a 5-minute chart up or a 10-minute chart of Mexican peso just to see what it's been like. It does seem to have some activity. Yeah, that's what I mean. That's a long while ago at this point. Yeah, it's been a long while since they've been able to get into those lows. But it does seem to play out the characteristic of Mexico, U.S. and Canadian. They do seem to be, just kind of much more firmer than everybody else. No doubt the dollar's been ripping it on the upside up until last week. But, the Canadian held in its range. The Mexican peso has held in its range. Maybe now they break their range in a positive way. I kind of doubt seeing the Canadian do it, but the Mexican peso has that look like it could do it. Yeah, we're really close to the lows, when it comes to the Mexican peso. I mean, 1925 in 2020. That's pretty impressive. That's 2+ years now. February of 21, February of 22. We're heading for 2.5 years where it's held on very well. Very impressive numbers. Right. From there, we've taken a look at some of these stock indices. We went through the stock indices and it was a really clear. Anybody wants to see anything more elaborate, we can look at. Wish we could get long the ruble on J4X. I hear you. Well, it's not the best thing in the world when you got the. What are they doing? They're yelling. Oh. Anyway, a bunch of you people yelling at Biden in Tokyo. But one of the things that really stuck out over this whole thing is that the two neighboring countries have strength. I think that's the best way to describe it. And and that's probably because of the Russian Federation, and everybody else feels more vulnerable. That's just a wild guess by me. And so it's really hard for Dukascopy to trade the product when they're trying to stop the killing. Basically, that's what it comes down to. It's pretty violent, And that is probably the answer to it all, too. But, Daniel, you've brought up some very good points. Definitely, brought some real interesting conversation to us today. All real well accent points, too. In other words, the currency will not be named, the evil currency, is making, doing great. And we've shown that chart earlier, and we'll show it again. It's just been in that weekly sell since back in here. It did jump into the daily buy or the weekly buy for a couple of weeks and right back down again. It's doing it again now. And you have to wonder, are we going to see those same type of numbers as the ones you described in 2020 and 2021? Are they going to go after? Let's see, the last time that currency was down that low was probably, I want to say, I guess I have to add more days to this, but I would have to say that it's got to be I don't know, like 5 years. I guess wasn't it? I guess it was the invasion in 14, right? So it'd be 7 years. I guess that would be a way of describing it, right? So the invasion of Crimea basically put that pressure on. And so we'd have to go back, let's see, 2014 or 2015. There is the 70s. There's the 60s. There's the 60s back in 2020. And there's the 62 in, what is that? That's in 2018. Let me put more time in there. That's a very curious thing to try to figure out, but that's probably what the problem is more than anything else. Is that combine it together with the Crimea, combine it together with the today, the right now what's going on, the even more aggressiveness. So trying to see if we can find the 49. I remember trading in the 49s. I mean, we went into a weekly buy, and there's 56. I mean, I remember trading in the 49s. I remember going into that weekly buy in the 56s, and it just launched itself back up again. USTRY and USDTRY long. I'll tell you, have you heard anything at all? I'm trying to figure out if they've done something wrong with their put guarantee, because we're seeing that same weakness and it's breaking the ranges, and we're real disappointed about that. We thought they had figured out their situation very clearly. There it is right there. Look at that. It's jumping through the range. It's like as if they've removed the situation here. Those couple of days where the poor thing just exploded all the way up to 21 in the euro Turkish lira, and then the dollar Turkish lira where it ran to 18, and we are now at 16. So something is going wrong with their guarantee of giving out free puts to any buyer of the Turkish lira. Something's going wrong, and we're not hearing anybody talk about it. Just that the inflation of a couple of weeks ago. All right. What else we got to look at here? What do we got here? Just news. All right. So, here we go. Daniel says Aragon vetoed for Sweden and Finland to not enter NATO, and thus the U.S. shorted TRI. My opinion. I know that he's talking with them. It's not final though, right? It's not final. It's just that he said that they have to. Was it the part that's outside or on the border of Turkey and Iraq, the KKP or something like that? They're supporting. I think the Finland and Sweden support them, and so he said that they had to stop supporting them. And I heard that they kind of agreed that they would come up with some solution for them. But you think that that's this is Mr. Biden's way of reminding them, don't play with us? Is that what it is? You think? That wouldn't surprise me any. Kurds. Yes. Exactly. So, you think that this is the U.S. government reminding Turkey that if they don't play ball, they'll punish them currency-wise? That doesn't surprise me at all. That could be. It might sound crazy, but it makes sense to me. I don't know. It does. It makes a lot of sense to me. So that does not surprise me at all. All right, traders, where are we at? We're at that point in time again where we get out of here. So we're coming into the last couple minutes. Yeah, I like that, Daniel. That's a good point of view. The U.S. is probably beating the currency up just for that reason alone. Yeah, I guess. Yeah, I mean it's kind of crazy, but it makes sense. It does. I mean what we've seen Mr. Biden and his people do, that does make sense. All right, we're going to get out of here. This is Doc from North America. We will catch you tomorrow on Wednesday. Happy Hump Day. So, happy trails to you until we meet again. Thank you, Daniel. Happy trails to you, to all our trading friends. Catch you guys later and gals on Wednesday, same time, same place.